Alright guys, we got good and bad news. First off, bad news is that the Santa hat is not bringing any good luck to AMC today. The good news is the short interest is shooting through the roof, and that's ultimately what we want to see with this trade on AMC. And forget the FUD you see, forget the bad YouTube videos that you will see today, and what I have personally seen over the past couple of days. I personally think, along with thousands and millions of other people, that the AMC trade is still fully intact. I don't think that is a question of if this trade is over. That is not the case. The whole market is selling off, and there's not really a good reason why it's selling off. We got the jobs data today, which was bad, but it should have been a good thing for the markets. So we're going to dive into really the three main things, or the four main things, that are causing a lot of fear in the marketplace today. Take a look at what is happening with AMC, how low we could possibly go, as well as the short interest. Literally everything you guys need to know will be here in this video. So hit that like button for me. Consider subscribing to the channel, as well as checking out the links in the description to get totally free stock, as well as to stay up to date with my buy and sell alerts. We have been killing it, making Facebook put trades today, making Neo, Baba. We have been destroying it. So check that out if you guys do want to, as well as make sure to follow me on Twitter. That link will be in the pinned comment as well. Now let's talk about it, guys. So AMC is getting down, almost down 9% at $27.64 per share, but they are not alone. The overall market is selling off a lot. And if you take a look at the S&P 500, we are at a very critical level here at the 50-day moving average, and we have this pulled up at on the daily candlestick chart. You guys can see this 50-day moving average is a very important level, even back here when we were selling off in early September, but all throughout the year. A lot of analysts were calling this out. We touched this 1, 2, 3, 4, 5, 6, 7, 8, and then we broke on the 9th time, and we're back at this level. So we're either going to break through this, or we're going to find support. We're going to consolidate, and then we're going to make that move back to the upside. Eventually, when that happens, you're going to see another big move to the upside with AMC. A lot of this is algorithmic trading programs that are bidding down these stocks, as well as mid caps like we have talked about. Those are the ones that are getting shorted even more than the large caps. But also AMC, like I've said many times, falls in that sector of the economy that would be hardest hit if this Omicron situation does develop into something much worse. But overall, the Nasdaq is getting killed today, down 2%. Russell 2000 down the second most out of any indice, down 1.03%. S&P just hit 1%. The Dow Jones down a little bit over 0.5%. Now, it's good to see the fear index, the VIX, is not going too crazy today, only up 8.37%, and the VIX basically monitors the S&P 500 put to call ratio. So when there's much more puts, the VIX goes up a lot. When there's more calls, the VIX will go down. And we're not seeing people panicking all too much, at least in the S&P 500, but we are definitely not doing great today. Now, what is the news behind this? What is causing this? And then let's get into the short interest for AMC and a little bit of the technicals, what to watch for, what are the key levels. So the biggest thing, the most important thing, is job growth. So this headline right here, it says job growth disappoints in November with a gain of just 210,000 jobs despite high hopes. And we're just going to go ahead and read the key points and then go over why this should have been a bullish thing. And really why this is not a bullish thing today. So key points: non-farm payrolls increased by 210,000 in November, following a gain of 546,000 the previous month. The number was well below Wall Street expectations of 573,000 jobs. Despite the big hiring miss, the unemployment rate fell to 4.2%, a 0.4% point decline that came even with rising labor force participation. So that's good to see labor force participation going up. But it does say professional and business services and transportation and warehousing lead gains, while hiring in leisure and hospitality was sluggish and retail lost jobs despite the traditional holiday hiring season. So why this should have been seen as a good thing, to see a huge over 50% miss with job creation in the month of November, is because Fed Jerome Powell and really everybody on the a part of the Fed, the 12 different Fed members, they have been speaking very hawkishly. Most of them now agree that we need to raise interest rates before the second half of 2022, right after tapering, which is supposed to end by July. Now, on the Fed meeting, and that's where we're going to pull this up, the Fed meeting is December 14th and 15th. Fed Jerome Powell will be speaking on the 15th. He said just 2 days ago that on this meeting, they may discuss and announce a faster tapering cycle. So tapering, as we know, they're going to be reducing their bond and mortgage-backed security purchases, $5 billion per month for mortgage-backed securities, $10 billion per month for treasury, basically treasury bonds. So that's $15 billion per month of less stimulus essentially pumped into the economy. And he's supposed to be announcing, or expected to announce, faster tapering. So instead of ending in July, maybe ending in June or May. Now, why this should have been a good thing is because in the past, when we have had these fears and concerns about Powell tapering, once you get bad job growth or bad job creation, you tend to see that tapering get put off. So I think investors and a lot of analysts are very confused on why we're seeing this move, because with this low job creation, you shouldn't see the market selling off as much. You should see the markets pricing in, not tapering as fast, and that's not happening. So it's definitely weird what is going on today. But all in all, not too much we could do about it. We're going to have to wait and see. Obviously, December 15th, the 14th, those are going to be very important days, as you should have peak fear around this time. So like I've said many times on this channel, we are not out of the woods with AMC stock or with the broad market. It does look a little bit bad, to say the least, at the current moment. So that's the situation. That is why this job miss should have been a bullish thing for the markets, like we have even seen in the past. Kind of, the Fed's mandate for maximum employment and price stability, their two biggest mandates, are not being met if you see the job creation is severely slowing down. So that just means longer quantitative easing, more money pumped into the system. So hopefully that makes some sense to you guys. Like I said, it's really weird what is going on today. Now, the other main concern is the debt ceiling. Now, between December 21st and January 28th of next year, that is where the United States could potentially start to default on its debt. So we have to get something done before then. And I do think that week of December 17th, that big monthly expiration day across the board for all stocks, is going to be the week where we do get debt ceiling resignation, where we do get something concrete set in stone that will relax some investors' fears. So that's definitely making the market sell off a little bit as well today. And finally, it's going to be this Omicron situation. It's not, it's not a surprise what is going on. Who says Omicron COVID variant detected in 38 countries? And a lot of people that are getting this are fully vaccinated. So that's not, not a good thing to see that happening. It doesn't look as bad as a lot of people thought, but we still don't have key data, like how effective vaccines will be, what the hospitalization rate is, what the mortality rate is. We still don't have a lot of data points on this, but that should be changing over the weekend. I expect to get some news on this that could be really bad or really good for the markets. And then by next week at the latest, I do think we're going to get some kind of news around that. On a good note, the Senate passed a bill to prevent a government shutdown, sending it to Biden. And then another bad thing is that Chinese stocks are getting beaten down because the SEC is threatening to delist them. So there is a lot of things at play right now, and I don't necessarily think we're at peak fear right now, but I do think we are close. And I think by mid-December, December 15th, like I said, that peak fear should be gone. But I think most of this revolves around Powell and changing the monetary policy. Now, let's talk about AMC. Let's go over the short interest. What is going on today? Like I said, short interest is exploding, now estimated at 17.5%, with 2.45 million borrowed shares today. Return shares a little bit over 500,000. Short interest change for the day, positive 1.9%. Current shares that are estimated sold short at about 90 million. And like I said many times, considering we were at about $43, $44 back here, the last exchange reported short interest settlement, November 15th, and the short interest was 17.05%. We have fallen considerably since then, and I don't think apes are selling. So what is happening? Market makers, hedge funds, institutions, they are shorting the stock. And like I've said also many times, AMC is a mid-cap stock, so they're already getting beaten down along with most other mid-cap stocks, and they're a part of the they're in a part of the economy that would be hardest hit if lockdowns happen or the Omicron situation got worse. So that is some good news. We are seeing the short interest going up. It wouldn't be good if we were seeing the short interest staying the same and the price of the stock was falling. That would mean people are selling, but that's not happening. Now, let's go over some technical levels to be watching for AMC stock. So if we're talking about where I want to see the stock, now I want to see the stock at about $29 by the end of the day today. We're going to have to see a major bounce in the markets to see that actually happen, but I do think it is possible. We're not really flushing down under this $29 level. We came down to $26.85. That was the lowest point we hit, and we're really finding a lot of, support at this downward price. So I do want to go ahead and mark that because I think it could be substantial as this situation does continue to develop. About $26.50 per share. We're going to get as close as humanly possible right here. We'll just leave it at $26.64 per share. So that's going to be another key level. You guys can see right here, that's where we came up. What was this? May 27th, and then came back down a little bit and then continued to skyrocket. So I do think there's some relevance to a support level right here, and you could draw that conclusion just based off of what we've been seeing over the last couple of days. So I do expect a move back to about $29 by the end of the day today. That's about $1, 20-cent move from where we are currently at. That would still put us down about 4% on the day. So that's really what I'm expecting. Not too much else to go off of as far as the volume. We're seeing about 17.5 million, and we're only a little bit over 1 hour into trading today, about 2 hours into trading today. So the volume could be very high as well. So that is going to be all for this video. I would not freak out. I would not panic too much. It's not all bad if you consider the overall sense of the trade and what we are really accomplishing here. We are seeing the short interest shooting through the roof, in my opinion, well over 20%. So I would not panic. This is the time, in my opinion, to be buying the dip. If you ever had your conviction in AMC, right now it doesn't make a lot of sense to be selling your shares if you could have sold them for much higher a couple of weeks ago and you didn't want to sell them then. Why would you want to sell them now? Watch the margin levels, watch the cash balance, be ready for anything. That's what I'm trying to say here. So that is going to be all for this video. Hit that like button for me, consider subscribing to the channel, and as always, check out the links in the description, link for free stock as well as the link for the buy and sell alerts. Both of those links will be down below in the comment section of this video, in the pinned comment, as well as the link for Twitter. So that's going to be all. I'll see you guys in the next one.